Well, good afternoon, everyone. My name is Chris Adlard. I work for a company called Elephants Don't Forget. I'm really delighted, honoured to be chairing this wonderful panel on consumer duty with some fantastic speakers here. Thank you very much for your attention. We want to make this interactive, so feel free to interrupt us at any point. Ask some awkward questions, get involved. You know, we want to really just make this as interactive as we can. So thank you. Okay, so first of all, very briefly about me, I have a real passion for the customer. Everything around customer transformation is what I love talking about. I do it day in, day out, and consumer duty for me is the regulated form of putting the customer at the heart of everything you do, which, as we know in financial services, isn't always the easiest thing to do, whether it's in lending or insurance, or it doesn't matter which sector, it's the same challenges, trying to get over the silos sort of structure of organisations. But without further ado, I'd love to hand over to our esteemed panel. And maybe, Andrew, if you could kick off and introduce yourself.
So, hi, I'm Andrew Seftel, Head of Loans at Metro Bank, although I guess most of our consumer lending would have actually been under the RateSetter brand. Metro is on a little bit of a balance sheet transformation journey at the moment, shifting its emphasis away from retail and consumer and towards business lending, specialist mortgages. But I'm still here looking after the retail bit of it. We've still got somewhere over 100,000 customers, somewhat over £500 million of lending owed to us. So sticking the landing is really important, both from a profitability point of view, also from a customer point of view. And just to add a bit of complexity, a couple of weeks ago, we signed a deal to sell the beneficial interest of our loan book whilst still servicing it. So I've got a whole new world of accountability to a third party in terms of how well we're servicing the books. So it's an interesting journey to be on.
Over to you, Charlotte.
Yeah, hi, I'm Charlotte. I work at Nottingham Building Society as Director of Customer. I've worked in the mutual sector for just over 20 years now, so I think it's sort of second nature to me to put the customer at the heart of every decision that I make and try and encourage colleagues and peers to do the same and really have that sort of customer-centric mindset. So, yeah, consumer duty for me, as Chris said, really helps to bring that to life and helps us to embed that culture. So excited for more things we can put into action.
Hi, I'm Alex Sharma. I'm the Director of Risk and Compliance at Cirencester Friendly. Excuse my voice. I've had a bit of a cold. I'm recovering now. So I'm a member of the ExCo team at Cirencester Friendly, and we're a pure income protection provider. Whilst we are operating insurance, I think there's loads of read across the lending sector, particularly when you think about differentiation by customer service and implementation of the consumer duty. All of us in Cirencester, including myself, are passionate about putting the customer first and servicing them well, which I think is an integral part of consumer duty.
Fabulous. Well, great introduction. So I'm going to start with a provocative question, which is, when it comes to consumer duty and good customer outcomes, has consumer duty really moved the dial in this industry, or is it more of the same regulator rhetoric? Discuss. And by the way, if anyone else has got some thoughts on that, we'd love to hear them. So over to anyone who wants to start first.
So I think it has moved the dial. So it's forcing firms to think beyond the sort of traditional profitability metrics. What interest rate we charge, default rates, cancellation rates, etc., and actually to look at the outcomes, each aspect of the journey that the product offers, and then to consider whether or not the product is suitably designed and operating effectively to meet those outcomes. So for example, I work in a mutual, and we believe we put the customer at the heart of everything we do, and yet we analyse every aspect of our journey as part of our consumer duty project, and we still found opportunities for improvement, because when you sit yourselves in the eye, you put yourself in the shoes of your customer, you inevitably find little wrinkles you didn't necessarily realise were there, and that it all adds to the sort of continuous improvement under the duty.
So is that different then to, for example, TCF? Would that be a change, or is it the same thing as what we've heard before?
So I know some people think that consumer duty is like TCF on steroids, don't they? I think and I don't think the regulator's been helpful. They haven't really taken TCF out of the handbook, and it would be easy if they did. I think consumer duty goes further and deeper than TCF ever did, because you really do need to think about your target market in a deeper way, and whether there's any foreseeable harm that you can cause in any aspect of the product design or the journey itself. So personally, I think probably the regulation, take away the reference to TCF and expand the reference to consumer duty.
So it's earned its place in the boardroom for your organisation. What about you guys? Do you feel the same way or not?
I guess I'm going to respond to your controversial question with a slightly provocative answer.
Excellent. I like that.
And I'd say within the context of consumer lending, perhaps consumer duty has moved the needle less than it has in other spaces because consumer lending is such a regulated space already. So, for example, let's zoom in on the consumer understanding pillar. Think about Conc 3.3. You need to be clear, fair, not misleading. Scroll down a little bit. You need to be presenting information in a way that's likely to be understood by its intended audience. And it's not a massive leap to get from there to the consumer understanding pillar. And this is regulation that's nearly 10 years old now. So even if you're a slightly more established lender with a slightly more established product, if you've been doing this seriously, you should have already been considering a lot of these factors that have now been put into the duty for the entire regulatory regime of the FCA. So I guess in short, what I'd say is it probably shouldn't be moving the needle that much if 2-3 years ago you were already really confident about your products. And actually maybe it's more about raising the bar for the industry as a whole and making sure that everyone's trying to get to the same sort of level where we've had issues in the past in consumer lending, and that's why we've got the regulation.
That's a great point. It seems to me there's a lot of overlap between regulation that's around vulnerable customers, consumer duty, COG 3, as you just said, but that doesn't mean to say it won't change or make things more positive by introducing a new thing like consumer duty, does it? What do you think, Charlotte? Has it helped you, or...?
I think it's made my job a lot easier. I would definitely say that, because it's all the things that I've been trying to do in my career for 20 years, kind of being brought together. And I think the to your point, it's sort of taken TCF to a clearer level for me. I think we've been able to really put stuff behind the 4 different outcomes under consumer duty and understand them against our products and services, and engage the leadership team and the wider population in the organisation to understand what it actually means. So I think having a consumer duty board champion has really helped to embed that culture, and I think it's particularly helped Exco and the board to sort of step up and think, oh, I do need to consider what I'm designing here for the customer, and not just the price or the commercial value of it. And I think one area that, and I kind of agree with you, but I kind of don't. In lending, we've struggled a bit. It's been much easier in the savings arm of the business to get consumer duty embedded, and in lending it's been more difficult because when you go to things like pricing committee or even in ALCO, they don't really talk about the customer outcomes. They're talking about the price and the margin. So to be able to go into those committees now, and we've developed, I was going to talk about it later, but we've developed a sort of customer impact assessment mindset, so people can really evidence that they've been thinking about the impact to customer on not just the price, but the product and the service as well, and we've got evidence that we're doing that. So that just wouldn't have happened 4 years ago. So
does that introduce a more sustainable view of growth within the business rather than thinking about the short-term reaction to what's going on in the market? Is that the aim, or is it more just culturally you're trying to get people to think differently about decisions they make around commercial decisions in lending, for example?
I think it's both. I think we've got a new lending proposition, which is to service what we've called extraordinary borrowers, to help own their own home. So that's people who wouldn't typically get a mortgage. And obviously there's commercial elements to that, but it also fits with the cultural piece. And I think making sure that you understand those customers and understand those needs is going to give you a more sustainable and commercially successful business. So I think it's got both angles to it.
I suppose that fits in as well with the whole foreseeable harm argument, Alec, you were talking about from the FCA last week. How do you build this into your product design? How do you make sure you're understanding what's going to happen to those customer cohorts in the years to follow? Yeah,
absolutely. And I do think good embedding of consumer duty does lend to growth in the organisation as well. So, our sort of that we don't sell direct to consumer. So we've had loads of positive feedback from our intermediaries on the way that we've engaged with them on consumer duty. we've certainly seen a higher level of satisfaction with our intermediaries and a growth in the last 12 months as well, in terms of the number of sales we've made. So it all kind of goes hand in hand as you build trust with your customer base. And in our case, whilst the ultimate consumer are our customers and they will become our owners because we're a mutual, we only get to them through intermediaries. So it's that building of trust. It becomes a virtuous circle in my mind.
On that note, I was wondering, is Consumer Duty sitting within your compliance team, or is it in the first line? What about you, Andrew? At Metro, where does it sit?
I think I wouldn't describe it as really sitting anywhere, and I think you're probably setting yourself up for a bit of a failure if you start creating a Consumer Duty team. It's one of these things I would say that certainly in a product space, you should feel entirely accountable for the compliance of your products, but that's with the support of a compliance team that helps you navigate that regulatory landscape. But the idea that you could hold the accountability in one particular place and that other people say, actually, I'm not accountable for Consumer Duty, I'm not accountable for those outcomes, I think that's a really dangerous way to structure your organization.
Oh, there's a big topic. I once heard someone say that if you don't have a single point of failure, not necessarily saying that the other functions aren't responsible for it, but you need someone who gets up every single day and thinks, right, are we doing the right thing for the customer? And I think Charlotte and Alec, you've touched on those themes as well, haven't you? Anything to add? Do you need a single person, or do you need it? What do you do?
So Consumer Duty is 100% owned in the first line in our organisation. So obviously I'm second line, and colleagues will come and consult with me, and I'm a key stakeholder in key meetings, and I'm obviously an ExCo member as well. So I can hold the first line to account at every layer in the organisation, but the actual ownership for all of the controls and all the processes we have in place are first line. And when we delivered the project, it was first line led. Right.
So do you think that's where it should sit?
100%, yes.
What about you, Charlotte?
No, I think everybody owns it. And I think, we had a conversation the other day about, my role as head of customer. We were sort of saying, well, there shouldn't just be one head of customer. There should be 501 head of customers. We should all be the voice of the customer, which for me translate into Consumer Duty. So we're trying to remove the language of Consumer Duty and just talk about the customer more and make, all decisions around, is this the best thing for the service we want to give customers or the outcomes, or is it the right thing for people in financial difficulty or whatever it is. So, and it kind of reminds me of everybody's favourite phrase, it's not once and done. And that's a similar theme for me in terms of if you just put it in one place and make them responsible for doing it, is everybody else going to think about it or just expect those people to tick that box for you and you don't even have to consider it? I don't think that's the right thing.
But you're still the person who runs the programme at Nottingham, though, aren't you?
Yeah, that's right.
Don't you need both? Don't you need a single point and...
I think you need to. So you need someone to be able to evidence that you are meeting the outcomes, and you need to be able to collate all the information that sits behind that. So we've developed a new dashboard which is based on the Consumer Duty outcomes and a Consumer Duty taxonomy that we've got. But that asks lots of different questions. So we call them the killer questions. We've got 9 killer questions all about the customer. And everybody across the organisation is responsible for adding something into those questions. So, and we've tried to think about those questions not just as a closed question, but an open one. So how do we actually know that we're doing that? So I'll go and talk to lending and find out, how do you know that that was the right product for that person? And so everybody collectively shares the reporting of that, which goes up to the board every month.
So would you consider that a way of measuring the cultural impact of this across the organisation? Is that the aim of this in terms of embedding it, or...?
Partly, yes. So, obviously when we talked about this before, measuring the cultural shift is really quite difficult, and there's lots of different things that we're doing to show that. And for me personally, I believe the culture needs to be a shift from top down. And we are starting to see that, and I think that did help having the Consumer Duty Board champion. And whilst that role is no longer a formal requirement, we're going to keep the concept of a customer champion coming from the board. And one of the things that I'm working on at the minute is the 3 to 5 year customer strategy, which is being built by the entire organisation. So I'm running a workshop in a couple of weeks that's got colleagues from the front line with members of the board to really build out the customer strategy in a customer-centric way. And one of the arms of our strategy is, how do we become a customer-obsessed organisation?
Wow.
So that's one of the ways that we're doing that. But, we could have, a full day on culture because it'll take a while to embed, but there's the small things that we're doing to build that.
Great. So lots of anecdotes that are surfaced up to the board and the board champions as well about where it's going right, where it's going wrong. Anything, Alec and Andrew, to add on those, how you're bringing it to life in your business?
So we have a sort of a number of different ways that we sort of tackle embedding it, if that's what you're driving at from a cultural perspective. So we have our consumer outcomes working group. So as part of our consumer duty project, we defined all of the outcomes we wanted our product and services to deliver, and then what metrics we thought we'd need to monitor that, and then who owns those metrics, and then we review those monthly, and it's a cross-functional meeting monthly. So that encourages conversations about consumer outcomes and also sort of breaking down of silos between teams. So because often if there is a potential to go off and investigate something, it may need somebody from operations and somebody from distribution maybe to go and work together to work that out. So we have that to sort of shift the dial culturally at the sort of ground level. Then also we have, so in our organisation, we have one balanced scorecard that we're all collectively measured on. And we're all, from the CEO down to the most junior person, it's the same scorecard. We all have to collectively work to meet the same goals. So, the previous 2 years, the Consumer Duty Project delivery was worth 20% of that score for those 2 years. Now, moving forward into a post-implementation world, we have consumer-focused metrics within that scorecard that we all collectively responsible for delivering, including any transformation. So where we spot continuous improvement initiatives, if there's a transformation project in train, then that's on our scorecard. So it has to be achieved in this year. And often those are binary, so either you meet it or you don't. And then also, we're a member of the Institute of Customer Service as well. So, and that's a large, wide-ranging national organisation. And we're relatively small in that organisation, in the context of their membership. And we go for accreditation with them. And we achieved a distinction accreditation in 2024. So out of the 400 firms of varying size that have been assessed, only 23 have received distinction. So I think that kind of proves that our drive for service and putting the customer at the heart of everything we do, has been validated by external audit, for want of a better phrase. And then we use their facility for surveys of our intermediaries, our employees and our members. That's only an annual process. But then the scores we get from there as part of our balanced scorecard, but also it overlays into our consumer outcomes metrics, and our MIs give us a greater layer of understanding. So it all kind of helps us improve consumer outcomes and test how we're shifting the dial in the way we behave internally at the same time.
I think you've explained that really well, if I can say that, and it feels like both of you have almost moved away a little bit from consumer duty, and it's becoming more and more about customer outcomes overall across all your areas of the business, which is really exciting. And the fact you've got the ICS distinction is a testament. Nottingham's owned by its members, so presumably there's additional pressure there as well for your customers. Andrew at Metro, how does it feel for you? Do you feel like things have moved forward? You've moved the dial. Is it embedded in the culture now, or is it just ongoing really for you?
I think we've been fortunate as a bank in that our culture I would describe as being very consumer duty compatible. One of the things that particularly comes to mind as a foundation of our culture and is drilled in literally on the first day that you join the company is the concept of a bump up. The idea, I think originally probably more framed as if you don't know, go and find out, but also the obligation on those people above you or diagonally from you to be able to support that inquiry. But in the world of consumer duty, in the world of a more outcomes-focused world, actually what's been really powerful is seeing people who are bumping up not because they don't know, but because they're seeing something and maybe everything's worked exactly as designed, but it doesn't feel right in terms of the outcome. And that's not necessarily managers. That could be someone on the teller line, that could be someone in the contact center, and it can work its way to my desk. And I don't always necessarily agree with the assessment. We don't always necessarily make a change off the back of that. But having that signal of this is the strategy we've got in place, and as with a lot of banks, you'll have controls along the way to make sure it's executing fine. But then getting that validation or not validation to say, hang on a second, everything's worked exactly as we've designed it. And however, that's the signal that allows you to rethink your strategy and allows you to say, actually, is this working? Is this giving the outcomes that we think we're getting?
Are you confident that your staff are competent in delivering those outcomes, and how do you ensure that? I'm putting you on the spot a bit here.
Yeah, you are. I'm in a slightly privileged position working on loans. We have a truly excellent contact center that's somewhat lending dedicated. It's to give you some idea of, I guess, why I really like it. It's a very tenured team. I think the median tenure is something like 6-7 years, which is unheard of in a contact center, and multi-skilled specialists. So we're not working in a world where you're having to call up and then get moved to another team, whether you are making a settlement, whether you are in arrears, whether you have a huge vulnerability issue, all of the colleagues are trained and competent to do that. We've got the QA, the outcome testing to back it up. And now I'm hugely fortunate as a product person to have that operational capability that's backing me up.
That sounds great. And Metro, it's definitely been a strength over the years of Metro, hasn't it, in terms of customer service via the call centre? So, yeah, lovely. What about you guys in terms of competency of staff and making sure that they walk the walk and as well as talk the talk?
I think there's a mixture of things at the Nottingham for us. So we've got really robust QA processes in place now and great T&C that support not only the colleagues speaking to customers, but their leaders as well to be able to test and coach and develop them and try and do that more real time. But I do think it's increasingly difficult for those frontline colleagues when you've got tech that you've built on and they're having to remember a million different processes. I mean, when I sit and watch somebody answering the phones and I'm like they're flicking from all these places where they've got different files saved in different folders with what that process is, et cetera, and not a fancy AI tool that can just tell them, Copilot telling them what the answer is. I think they do an absolutely amazing job. But then when something, you see the ever-evolving landscape of vulnerable customers and what we need to do for them and how much more we need to understand their needs, and supporting those colleagues to be able to do that is a challenge, because then you've not got all the data that you need to be able to inform what you want to advise the colleagues to do. So I think that's something, as an organisation, you've got to take responsibility for making sure that you're equipping those colleagues and supporting and empowering them to be able to make the right decisions for the customers. Because if they've not got the right tools or support surrounding them, then we're not setting them up for success. So we see some great examples in the branch where it's face-to-face, and it's probably slightly more challenging in the contact centre for us, I would say.
I'm really glad you raised that. I think internal tooling is hugely important in terms of the effectiveness and the success of contact centre frontline colleagues. We've put a huge amount of emphasis over the years in building out our internal tooling as well as customer-facing tooling. So if we're launching a new product, new feature, it's not just about having the website ready, it's about making sure that that's set up and designed with the frontline colleagues are going to be using it. So like vulnerability, for example, when we implemented that, we talked to the frontline team about what they want, and so now when you look at a customer profile where we've got some vulnerability data, that's literally the first thing you see when you log on to that profile. And it's easy to imagine a world where you were designing a system without such a consideration for the front line, and maybe that's buried 3 menus deep and you're just not having the same effective conversations. It's not enough to have people who are motivated, well-trained. They need to have the tools, and often I think they can be secondary in the decision and design of new processes and new products.
Yeah, and I don't want to take over, but just to give you an example, for our colleagues in the contact centre, there's 3 different systems where there could potentially be a note about vulnerability, so it doesn't stand out to them immediately, and which is a far cry from personalisation, which we know is what customers want. So yeah, a long way to go.
So for us, I mean, because customers are at the heart of everything we do, I think from a cultural perspective, we are there. But where we always seek for continuous improvement. And so last year, one thing that we implemented was a transformation of our claims handling journey. So obviously, because we're an insurer, the only time you really care about your product is when you want to make a claim. That's when you actually know if it was worth paying for. And we had an old-fashioned way of processing claims where, there was one team that would, receive the applications, another one would admit, and then another one would then, once it got into admittance and they were in claim, they'd sort of manage. And then when it was due to review to see whether they still needed to be in claim, it'd be another team. And it became clunky for the staff. It was probably demotivational for the staff as well because they only learned one aspect of the claims handling journey. And from a consumer perspective, depending on how long they were in claim, because our products, you can be in claim for life. So if we offer a protection product where if you are unable to work and you've been paying your premiums, we'll pay you to retirement age. So for some of our long-standing members as well, or potentially long-standing members, they may have to deal with a number of people over time. So last year, we implemented a complete transformation where the same claims handler looks after your claim for life, the whole time that it's in claim. So it was massively empowering for our staff because they learned a bunch of new skills, but also started to see the perspective of the customer at each stage in the claims journey and to care about them a little bit more and to understand more about their medical history and know when to follow up on them and how to speak to them, etc. And it's given a much better experience for the consumer as well. So that's probably a good tangible example we've got.
It's a great one, and it's funny because a lot of improvements are done by doing those kind of things where you forget about the silos of the business, forget about the data silos, or try and get around them and put in place mechanisms to follow the customer all the way through the journey that they're going through. Have you guys got any examples of things that you've done there to improve the journeys that the customers go on? Maybe around vulnerable customers, for example. I mean, I know, Andrew, you touched on that a little bit, but...
I might instead just react to the story about claims because more of a personal anecdote, but I was renewing my home insurance maybe 6 months ago and got quite an interesting quote, looked good, from a well-known provider. And before I clicked the button, I decided to call up the claims line, and it was 2 minutes of IVR to then get through to a bot. And I thought, no, actually, I think this is the one for me. So maybe that would be a suggestion for anyone else who's shopping around for insurance, is call up the claims line and see how long it takes you to get through to a human.
Yeah. Can we ask any questions? Yeah, please do. We did say at the start, so let's open up. Yeah, absolutely.
I've got a few, but I'm going to try and take it. Firstly, I'm going to say, Charlotte, you are apparently from the Nottingham Building Society.
Excellent.
I'm sorry, Nottingham
That's not a sign.
No, absolutely, and thanks for all your contributions. I think quite the opposite. As a Chief Growth Officer, I'm interested in growth, but not at the expense of bad customer journey, etc., so very much into that. As well as, ultimately...
Sorry, did you introduce yourself?
No, sorry, Lisa Addison. I'm a friend of Lisa Moyle over there, so she's responsible for me on this occasion. I work in FS partly, but other industries as well, actually. So, in back to a kind of chief revenue and chief growth officer type role, interested in numbers, interested in achieving, interested in escalation. Is it true that this industry could never really get to the consumer industry or the retail industry? Or I was even thinking of being for Amazon. Can I even call Amazon an FMCG company these days? Possibly. Having started my career at Coke and McDonald's, those sort of brands. Have we really got a long way to go before, we can put the customer really at the heart, as well as not expensing on our ultimate objectives, which is revenue, I think, possibly with the exception of you, Charlotte, who might say, and Alec indeed, from sort of mutual or building societies, that sort of environment. So is growth possible as well as always putting the customer first?
Great question. What do you guys think?
100% yes, I think. And I think it's about, there's lots of studies out there about companies who truly understand their customers and deliver the right customer experiences, have a commercial advantage. And I think where you've got to get it right is really understanding your customers and, your target segments and what are the needs of those different segments and be able to show up there. So I was in an earlier talk where somebody mentioned moments that matter. So for me, it's about, taking those segments, what are their customer journeys, what are the moments that really matter in those journeys for them, and understanding, what is their expectation and where do you perform on that. So a nice exercise that I've seen is, customer's expectation is here, you're performing up here, you're investing too much in that one, so bring it down a bit. You can afford to, to play less in that space, whereas over here you might be performing down here, and that's where you need to invest, because then that's where you're going to get the commercial advantage and bring customers in. So, yeah, I wouldn't expect a mutual to ever be an Amazon, but I think we've got a long way to go. I was reading another article the other day that said 4% of financial services organisations are truly customer centric, which is just eye-watering, really. Absolutely, yeah, Starling, whoever, yeah.
What do you think about that from a Metro point of view, Andrew? You feel like you're quite a relatively new player?
I don't know. I think in some ways, one might say the last of the old banks, in that we predated slightly, I think 12, 13 years now, the real sort of fintech revolution, and started out with a very much branch, we call them stores, based approach. But the customer, I think, has always been a really important part of how we think about banking, how we think about our products. In fact, if you go into one of our stores now, you'll see we've put out a ton of new posters that announce a shift towards relationship banking as the heart of what we're doing, and that's come out of an insight that we feel like a lot of our customers actually hold us in slightly special regard, and that's why we're going to try and play to our strengths a bit and actually move a little bit away from mass markets, high distribution products and segments. I guess going back a little bit to the original question, if I'm thinking in a slightly hard-nosed way about growth, one of the really important things to have a strong growth engine is strong unit economics. So, thinking as a lender and thinking about my P&L, what are my cost lines? The stuff I really worry about, probably in order, would be cost of credit risk, probably my marketing distribution costs, my cost of funding. Things like servicing costs are probably not keeping me up at night. And so on that basis, there's not really a good excuse to cheap out on it. It's not going to really, really shift the unit economics of the lending you're doing, at least, in the sort of consumer spaces I'm familiar with. And, moving on to distribution, which is the other important bit of trying to build a growth business, advocacy is really important, whether that's direct, customer to customer, or whether that's, being able to show off a 4.9 Trustpilot rating in your adverts and your PPC, having that similar sort of advocacy that can get surfaced on intermediaries like ClearScore Money Supermarket these days. So no, I've never really seen a reason other than indifference to not put the customer at the heart of it. It's maybe it's not a priority for some people, but it's definitely not an impediment to being a growth business.
So I think that there is still lots of opportunity to grow within financial services without us all eating each other's lunch as well. So when I think about financial inclusion, for example, which is a really hot topic at the moment, there are 1 million adults in the UK that don't have bank accounts. 22% don't have more than £100 in savings, and 12.5 million people don't feel comfortable in managing their own finances. So I think with the growth of technology, there probably are products that can be developed for those people, and particularly in the lending space. Those are the people who probably most need access to lending, but are least able to access it, for example. So the government have put in a target to double the size of the mutual sector over the term of its office. And I don't think that the mutuals are all going to go out and try and take each other's business. I do believe that there's loads of opportunity out there for people who don't have access to financial services now that could do. Often these are the underserved. And I think there's plenty of opportunity with the right technology to develop appropriate products for those people and to grow the sector in that way.
Building on that, so here's a question as a follow-up. Consumer duty, I've heard a lot that it's too expensive to do it properly, and to do what you're saying is to be a customer-led business, open up new market opportunities, serve your existing customers. Has anyone heard in the audience or thought this consumer duty stuff is just too hard work and we just can't pay for it. It's too expensive. No? All right, another question then. Do you feel in your businesses that consumer duty, you've been pushing on open doors and it's been a positive thing? Any thoughts on that? Yeah, internally, externally, whichever really. Were you going to say something?
Yeah, I was going to offer a slightly different question about, I'd be really interested to hear the panel's views on the role the regulators played and the role that they will play in the future to enforce this consumer duty.
Great question.
I've got lots of views, by the way.
So we know the regulators looking to reduce the size of the handbook. So they're quite open about that. So they're trying to streamline regulation or prescriptive regulation. So there's already a consultation out there which is asked for examples of where regulation conflicts with each, different bits of the handbook conflict or are confusing. And I imagine they're working their way through all those responses. They've also said that they're going to be issuing another consultation on the consumer duty. I think they said around May, which will be about simplifying the duty where it's had unintended consequences. So, for example, currently the fair value assessment has to be done annually, and they are considering whether we only need to do those when there's been a material change to our product, which will reduce some of the bureaucracy. We know that they have said that the board champion is now a voluntary rather than the mandatory role. I think certainly for most sort of really consumer-focused firms, they're probably likely to keep the board champion. But we'll have to see how that plays out. And there are other things out there, aren't there? That there's currently a market study on premium finance, which I'm quite interested in. Even though I'm not in that sector, because I used to be in that sector, and I know that how it all played out with discretionary commission models on car finance. So I'll be interested to see how it plays out on premium finance. So I think the regulator, and we also know, so last year they did the price and value assessment, and then they published their findings before Christmas on areas where they thought firms had done well, not done well, and they expect us to read that and act on it. They're not setting out new rules, just that we should learn from their learnings. And they've already indicated this year they're going to do the same on consumer outcomes reporting. So I think we will see the handbook slimming down, more general, updates from the regulator, but an actual expectation that we act upon that. And I think they will start to show their teeth on firms if they come in and we're not demonstrating this continuous improvement cycle with consumer duty. I just don't think they'll look kind on that. That's my view.
Any final words from you guys in the last minute we've got here?
I was just going to say, so I think, I really like the regulator. I know that's probably an unpopular view, but I think they provide, I think if you use their guidance properly and you evolve for customers, then you can't really go wrong. And I think we'd all be very naive to think that customer outcomes today, as per consumer duty, are going to stay the same even for the next 12 months. The environment's changing constantly, and we've got to expect customer needs to change constantly, and therefore the outcomes that we give them in all our products and services need to continuously evolve. And why would the regulator not expect you to do that? So you need to be maybe a step ahead, but that shouldn't be a surprise.
I think, given that we're on the lending stage, it'd be remiss of me not to talk at least a little bit about CCA reform, which I guess is probably the big thing on the horizon, and it's a bit unknown still how it will interact with consumer duty. I think in terms of the regulator having teeth, or whatever the precise wording is used, probably the most interesting thing for me is, I guess, the sanctions, the unenforceability regime that currently exists within CCA, and whether that will persist. Obviously, within consumer duty, there's no private right of action. That got kicked out at the CP stage. So I don't tell... Is there anyone from the FCA here? Good. So don't tell them this. I actually quite like the unenforceability regime because it makes people take a lot of this stuff seriously in a way that I think people might be tempted to cut corners if they are reliant on the regulator taking action where there's a breach. The fact that there's an automatic sanction if you're not following the rules, I actually quite like in terms of creating a level playing field and in terms of creating really clear expectations for customers about what happens if there's a breach. And it'll be really interesting to see as we reform the CCA, move it into the handbook by the looks of it, whether we stick with that sort of automatic sanctions unenforceability regime or whether we move into a world where we're reliant on the regulator to be taking action where firms aren't meeting their duties.
Great. Thank you very much, everyone. I think we're out of time now, Lisa, is that right?
We are, but we can carry on what has been a fascinating